Hi, welcome to Wealth Wins, the YouTube channel where you get closer to financial independence every week. I'm Kevin, and in this video, I'll go over why most people think it's a good idea to save for retirement, why I don't ascribe to that theory, why I'll still retire early, and why my strategy might work for you. The common advice you see or you hear from gurus, the internet, your parents, is to save for retirement. Here's Dave Ramsey's website talking about how you should save for retirement using IRAs and 401ks. NerdWallet, same thing. There's a good reason for this. In a normal brokerage, you're putting your post-tax income into, say, stocks, and the gains you have from those stocks are then taxed again. So that's double taxation. In a retirement plan, you're only taxed once. Either before you put the money in the case of like a Roth IRA, or you get taxed on withdrawal in the case of, say, a 401k or a regular IRA. But the biggest reason why people are encouraged to save for retirement is because most people just don't plan. Too many people just don't have a solid retirement plan. It's that 3 in 4 don't know how much money they need to have saved by the time they retire so that they can fund their lifestyle after retirement. Many people are counting on Social Security, but unfortunately, if you're under 48, you shouldn't expect to see a single cent of that. Social Security funds are expected to run out by 2037 at their current rate. Because so many people don't save enough, convincing people to put money into retirement is almost a forced savings function. You see this in the market, with employers, in lieu of pensions, offering 401k matches. That is dollar for dollar matches into your retirement plan. So if I were to contribute $100 into my retirement plan, my employer would match it by putting an extra $100 in that plan as well. And that's their way of encouraging their employees to think further about their future. But if you're watching this video, likely you're trying to be a little savvier about how you manage your finances. Or you're a friend that I asked to smash that like button and subscribe so I can game those YouTube algorithms. And if you are, I appreciate that. So the biggest reason why I stopped contributing to my retirement funds is because I can earn better returns if I use my cash elsewhere. That's because instead of earning, 10% annualized from investing in stocks, I can earn 20 to 30% or even more by investing in real estate. There's a reason why 9 in 10 millionaires hold real estate assets. So here's a real example. I bought a property earlier this year for about $235,000. I put down about 25% of that as a down payment and financed the rest of it with a 30-year mortgage. That house that I bought brings in $3,200 a month, which means after my expenses, it cash flows about $1,600 a month. Also, because part of my mortgage payment goes to principal, I'm also gaining about $260 a month in principal with every payment that my tenants are making. And at the end of the year, I even save on taxes. I can deduct my mortgage interest and also my property taxes from my tax returns. And so that, saves me about $200 a month in taxes, or $2,400 a year in taxes. So all told, after accounting for vacancies and taxes, I'm earning about 25% on my $60,000 initial investment. There are risks with real estate, especially during COVID. There's a risk that you'll have higher than expected vacancies. There's also a risk that your rental market in particular suffers from a decline. However, if you buy correctly, which means buying at the right price, you'll still have an asset that generates monthly cash flow for you. And so while I've done well investing in stocks, it's not nearly as predictable and definitely not as guaranteed, especially in the short and medium term. For the advanced investors amongst you, you might be wondering, can I invest my retirement savings in real estate? And the answer is yes. You can use what's known as a self-directed IRA to invest in real estate. But there are two problems. First, much of the outsized returns from real estate come from the leverage that a mortgage provides. If you use a self-directed IRA, and say put 25% down on a property, you can only count 25% of your income gains as non-taxable. The other 75% of your cash flow will still get taxed at your normal income bracket. So that kind of defeats a lot of the tax saving purposes of that self-directed IRA. And to me, that's a tax and accounting headache that I just don't want to deal with. The second issue is contribution limits. You're only allowed to contribute $6,000 a year to your retirement funds, whether that be to your 401k or to your self-directed IRA. That means it's going to be a while before you're able to actually buy a property of any substance. You might be able to get around this by rolling over your 401k into a self-directed IRA, but this is a maneuver best suited to discuss with your financial advisor or a tax accountant, neither of which I am, by the way. The title of this video mentioned that I could still retire early despite not saving for retirement. And that's true. With real estate, I expect to make enough money for my properties by the time I'm 35, and hopefully even sooner, to replace the income I get from my day job. Compare this with saving for retirement. Even if I end up with a nest egg of $1 million or $2 million, I still won't be able to touch those assets or realize those benefits until I'm 59 and a half. That's another 30 plus years away. Rather, with my chosen strategy, I'll be financially independent far before that, and I won't have to draw down on my principal or my savings to fund my lifestyle. This strategy of mine requires that you are more actively involved with your investments, but I actually think that's a good thing because I've spent the time to evaluate all sorts of different financial products. I have a very clear picture of how to set up a strategy that works for me. So for all of you watching, rather than spending the next 10 years of your life figuring out a financial strategy like I did, you can spend a couple minutes each week building up your own financial independence strategy. Leave a comment down below if you have any questions or if you would like me to review any other investment products or strategies. As always, if you found this content valuable, consider subscribing to the channel. Until next week.